Trent Bradshaw, Brandon Rogers, Bradshaw Financial Planning, and Mind Your Money. Back with the market update and actually reallocation update. So what we're going to be covering today, we're going to talk about some inflation numbers, potential, and then interest rate increases, what the potential's there, and then also the reallocations and what we did for the second quarter of 2023. All right, well, let's jump right in. Let's talk a little bit about inflation. Looking at the Cleveland Nowcast, it's one of the data points that we look at on indicator on a consistent basis. The Nowcast has inflation coming in for the month of March, somewhere in the neighborhood of about 5.4%. If we get that print, that's going to be down from 6% in February. So remember, last summer, inflation peaked at 9.1%. Now we're down potentially into the mid fives. So the interest rate increases are definitely working. Yeah. The Fed's moving in the right direction in regards to that. But if we do actually get 5.4% or lower, will the Fed pause? And it looks like the market might be interpreting that at this point. Right. When you look at the probability of the rate increase on the May 3rd meeting, I think it's a split between 50-50 whether we're going to get one or not. Most likely we probably will see another quarter of a point, and then does the Fed stop? Well, the market's basically telling us that they're believing that's the case. Yeah. So a pause is in the works. That's what the market is looking at. Will it happen? Don't know. We'll have to see from that standpoint. But that led us coming into the second quarter to make some adjustments to the portfolio. Yeah. So what does that look like?
Yeah, so again, if the Fed does pause after that rate hike, we think that's going to be definitely positive for stocks. So in preparation of that move, we're kind of slowly taking off maybe some of the defensive measures out there, and We've added a little sliver of technology back in as well. So again, we just try to make some subtle changes, and we want to ease back in and don't jump all in all at once, right? So still have some defense in there, but let's get a little more equity exposure from there. So,
but we still have a large cap core quality that's in the portfolio itself with the dividend payers. We still have that. Yeah. But again, like you said, adding in a little bit of technology at this point to try to trickle in. We do think the second half of the year is going to be much better than the first half. Right. So we'll take a look at it at that point, potentially get more aggressive moving forward.
But again, as always, we'll keep you posted and up to date. So again, subscribe, like the videos, check out our podcast that we've got coming out all the time as well on any major platform from that end. But again, if you got questions, just let us know. But thanks for joining us, Brandon Rogers and Trent Bradshaw with Mind Your Money. Take care.